Why are mortgage rates still high despite Fed cuts? That's a question that I get every single day. Did you know that despite the Federal Reserve lowering interest rate 3 times in the past 6 months, the average 30-year fixed mortgage rate remains at 7%? That's right. This week started with mortgage rates at 7.11% and ended slightly lower at 7.05%. The Fed's rate cuts, which brought the federal funds rate down to 4.25% to 4.5%, were expected to ease borrowing costs. Yet, mortgage rates have moved in the opposite direction. Why? The answer lies in persistent inflation, investor sentiment, and supply-demand imbalances in the bond market. Let's break down what happened this week and how it impacts the real estate. On Wednesday, the Fed announced its first interest rate decision of 2025, holding rates steady at 4.25% to 4.5%, citing resilient economic growth and concerns about sticky inflation. This decision aligns with their cautious approach after 3 previous rate cuts in July, September, and December 2024, totaling 0.75% points. While the Fed signaled possible future cuts, markets remain skeptical, keeping mortgage rates elevated. Thursday's GDP report gave us a snapshot of the economy's momentum. The US economy expanded at an annualized rate of 2.3% on Q4 of 2024, slowing from 3.1% in Q3. While still positive, this deceleration suggests the economy is cooling without tipping into a recession. Consumer spending remains strong, but business investment slowed, possibly in response to high borrower costs. The labor market remains a key factor in rate decisions. Initial jobless claims fell below 16,000 last week to 207,000, indicating employers are still reluctant to lay off workers. This strong labor market contributes to wage growth, which fuels inflation and keeps long-term interest rate higher, including mortgage rates higher. Friday's PCE inflation data raised concerns about price stability. The Personal Consumption Expenditure PCE price index, the Fed's preferred inflation measure, rose at 2.6% year over year, accelerating from 2.4% in November. Core PCE, which excludes foods and energy, increased 2.8%, signaling persistent price pressures. These numbers suggest inflation isn't cooling fast enough, making further Fed rate cuts uncertain. Thank you for tuning in, and don't forget to follow me on Facebook, Instagram, and TikTok at Eli_Wiseland. And remember, our main job is to help you and your buyers win this very competitive market. We will help you make more money getting your buyers' offers accepted and closing them on time. We will provide you excellent communication during the pre-approval and loan process, and we will follow up with your leads diligently, helping you to gain even more referrals going forward. If you want this advantage working for you, give me a call. Telephone number 718-807-7423. We greatly appreciate all your referrals. And that's all, folks. This is everything that happened this week. Please, we look forward to seeing you here next week in our weekly market update. Have a great and profitable week. Bye-bye.